We start in the US with President Trump's trade war, because today it has a new target. As of nearly 2 hours ago now, midnight in Washington, 9:30 a.m. in Delhi, most Indian goods imported into the US face a 50% tariff. The US imposed a 25% import tax earlier this month because of what the administration sees as an unfair trading relationship between the two. Now it's doubled the rate as punishment for buying oil from Russia. So let's just give you a sense of what's involved here, looking at some of the numbers. To start with, last year, the United States was India's biggest trading partner, with bilateral trade worth $190 billion. But here are the numbers President Trump is upset about. India sells a lot more to America than the other way around. So last year, the US ran a trade deficit with India of almost $46 billion. Proof to President Trump the relationship, in his view, is unfair. And here's the other bone of contention. India imports most of its oil, last year almost 40% of its crude, from Russia. Well, President Trump is saying India is helping Russia fund the war in Ukraine. Earlier this month, he accused it of not caring how many people in Ukraine are being killed by the Russian war machine. India's Prime Minister Narendra Modi is defiant on all of this. On Monday, his ambassador to Russia said India will continue to buy oil from wherever it gets the best deal in order to protect the interests of its 1.4 billion people. So how hard will these tariffs hit India? One US-based expert has told us the overall impact on India's vast economy will be limited.
Well, the trouble is that a lot of the discussion has been very alarmist based on absolute numbers, because India exports about $70 to $80 billion worth of merchandise. But honestly, when you look at it, it's about 2 to 3% of India's GDP is the merchandise exports to the US. And of that, some very significant exports have actually been exempted. So medicines have been exempted, and services, which is the big one, have been exempted as well.
Well, many Indian companies and workers will be hard hit, though. Our Mumbai correspondent Archana Shukla has been talking to a company boss who's a major exporter to the US.
Well, yes, there is a scramble here amongst businesses focused on the US market. They are anxious, they're nervous, but there is also acceptance that the 50% tariffs are here now, at least in the short term, and businesses are trying to brace up for the impact. I have with me Vishwanshu Agarwal. He's a textile manufacturer and exporter who has businesses across the value chain, from weaving to finished goods, apparels, etc. Vishwanshu, the 50% tariffs are a reality today as we speak. What's really happening on the ground right now when we talk about factories like yours focused on the US market?
Sure. First, Archana, I would like to thank you and BBC for giving me this global platform to express on behalf of the industry how we are dealing with these uncertain times. So yeah, Archana, coming to your question, customers are now, with this 50% tariff, especially US customers, or only US customers, are not willing to sort of, they can't absorb these kind of margins in our industry, and they are definitely looking for alternatives. So, orders haven't been coming in lately, and things are not good. Orders are drying up, and things are not very good at the moment.
Well, in terms of production, have you stopped producing, or are you still working your factories?
No, we are still working. So what we are doing currently, being slightly larger and more, this is impacting us a little more. We are offering some discounts to the customers to sort of navigate through these tough times. So we believe eventually that we hope that these tariffs don't continue, at least the second 25%. And I think in the next 5-6 months, if you can absorb these losses, then we can, move forward from there.
Right. If these 50% tariffs stay on for longer, what are the contingency plans that you're working with?
So the contingencies that we are looking at is the usual markets, the bigger markets, the economies like UK, Europe, and even emerging markets like South America and UAE. We are looking to try and build a relationship with them and work with them. And even India, you cannot ignore as a sector. It's a very important sector, and the consumption is growing every year. So it's a very important sector.
And what are the kind of policy support that the industry, particularly the textile industry, is seeking from the government, especially for small businesses?
So one is, Archana, incentives are important. Direct incentives for the exports that we do to the US. They need to help us with increasing that. The second is, some kind of incentive, worker incentives, bank moratoriums, and even if the government, this UK FTA that was signed recently by our government has helped to get a lot of traction into
Right.
India. It should be signed any moment now.
Right.
Similar, if we can do with other countries like Europe, this will really help the industry further.
Right. Thank you, Vishwanshu. These are exporters who are looking at alternate markets. They're looking for some policy support, but they also know that in the short term to medium term, the impact that the US drop in business would happen will not be offset. So it will be a major impact, especially for export-driven sectors here in India. We are looking for some small businesses that might fold, and they would need more amount of support. And also the hope is that US-India go back on the table to talk trade and get to a resolution on this.